Yeah, look, at the end of the day, we are in a very dangerous situation as far as financial markets go right now. We are on the brink of things absolutely seizing up. And it doesn't seem like Jerome is backing down. I think he plays a horrible game of poker myself. But at this point, it seems like he's hell-bent on trying to contain inflation. I think the long-run outcome is, as Luke Gromen beautifully points out, they're going to have to back down. And if they do, it's quantitative easing forever. QE infinity, okay? And if it's QE infinity, it's Bitcoin. That being said, it doesn't matter because all paths lead to Bitcoin.
This is the Blue Collar Bitcoin Podcast, a show where average Joe firefighters explore the most important monetary technology of the 21st century. We talk Bitcoin, we talk finance, and we talk shit.
Hey folks, thank you for joining us here again. We greatly appreciate it. This was a very insightful chat with Dazbea and Greg Foss. We primarily focus on a new project the two of them have been working on, along with some other prolific Bitcoiners. The project is Looking Glass Education. Dazbea is an Aussie electrician, or Sparky as they're called down under. Daz has been a prolific writer in the space, covering everything from the mechanics of how Bitcoin mining works to the details of the bond market. Daz is a man of many talents, and he continues to lean into them and educate. We will link to Daz's many incredible articles on Medium in the show notes. Greg Foss is a man that needs no introduction. He is incredibly passionate about educating and assisting regular folks about Bitcoin and investing. He spent 30 years in financial markets with a focus on trading high-yield credit. Greg is an ardent proponent of education. And Greg also hilariously joined us from the Detroit airport, so please excuse a little bit of background noise. The focus of our chat is Looking Glass Education. Looking Glass is an all-in-one educational platform built with the intention of empowering individuals to take control of their financial futures. Their focus is on building and showcasing timeless educational content that is easy to read and free from financial jargon. They offer multiple educational mediums, audio, video, and long-form articles. Their ultimate goal is highlighting the potential of Bitcoin while removing the complexity shrouding our monetary and economic systems. Dan and myself, Josh, have taken the first course offering at Looking Glass. We are impressed with what they're creating, and we encourage you to go check it out. You won't be disappointed. In this episode, we cover Foss's investment strategy, of course, bond math, shitting the bed, Bitcoin miners and equity plays, rebalancing your portfolio, Bitcoin night terrors, Nipple Rings, index versus active investing, credit market shit hit the fan indicators, and bonds and equities falling in tandem, which is very unusual. If you like the show, please like or subscribe and leave us a review on whichever podcast platform you use. You can follow us on Twitter at blue_collarbtc or send us an email at bluecollarbitcoinpodcast@gmail.com. Blue Collar Bitcoin is proudly sponsored by COINKITE, creator of the Cold Card, the Block Clock, and the Open Dime. Dan and I have been Cold Card users and recommended it to friends and family for years. If you are serious about protecting your cold stored Bitcoin, we highly recommend using a Cold Card. They have recently updated the Cold Card to a new Mark IV version. This update includes the ability to use near-field communication. No more shuffling SD cards back and forth to sign a transaction. Whether you are new to the idea of cold storage and want a simple, easy solution, or you're an old salty dog who wants to create a bulletproof multi-sig setup, the Cold Card Mark IV is the ideal signing device. If you're in the market for buying some sweet Bitcoin swag, you could not do better than grabbing a block clock. This is a gorgeous device that sits on a shelf or mounts on a wall and displays the price of Bitcoin, along with probably about 100 other metrics of your choosing. It's sleek, elegant, and a must-have for any proper Bitcoin shrine. If you decide to purchase a Cold Card, don't forget to use our discount code BCB for 5% off. Blue Collar Bitcoin is also sponsored by LEDN. LEDN is a very unique financial services company with a highly principled Bitcoin-forward perspective. They are the first ever digital asset lending platform to undergo a formal proof of reserves attestation, where an independent public accountant regularly attests that the company is properly accounting for client assets. Simply put, This company mirrors and embraces the transparency, accountability, and auditability of the Bitcoin protocol and network itself. If you've listened to this show much at all, you've certainly noticed that we advise our listeners to be careful, manage risk, and not get over-leveraged. And that does include ensuring that any borrowing and lending decisions you make sound mathematical sense for your lifestyle and specific situation. Where available in your jurisdiction, LEDN offers a menu of powerful financial services. Keep ownership of your Bitcoin and access dollar loans with LEDN Bitcoin-backed loans. Harness your Bitcoin holdings to buy a new property or finance the home you already own with the upcoming LEDN Bitcoin mortgage product. Save Bitcoin and USDC to have access to LEDN dollar loans or trading services, if available. You can look into LEDN's well-architected menu of services at ledn.io. You can receive a 10 USDC sign-up bonus for creating and funding an account by going to start.ledn.io/bluecollarbitcoin. Enjoy the show.
All views and language expressed by the hosts and guests in this podcast are solely their personal opinions and do not reflect their employers or organizations they are associated with. Do not treat any of the content in this podcast as investment advice or as an inducement to follow a particular strategy. This podcast is for entertainment purposes only.
Greg, Daz, you are both in the honorable and acclaimed fraternity of individuals who have been privileged enough to be guests on this show multiple times. Thank you for joining us, gents.
Thanks heaps for having us, boys. Looking forward to the chat today.
Yeah, thanks.
As are we.
From lovely Detroit Airport. Happy to join you guys.
You know, Greg, we sent out that we obviously just record audio. We don't produce video. I wasn't expecting the nipple rings, but they look really good on you.
I think these are my big tits, my big man boobs that Bitcoin Twitter so obviously pointed out that I need a bra. What do they call it again? A manzir, right? A manzir from
Bitcoin Twitter's heartless.
Straight out of Dodgeball, like the what was the name of the team?
I don't even remember.
Yeah, I don't remember either. But they were in leather. I know that.
It was an unflattering photo that was taken during Bitcoin 2021. And I literally said, look, I need a man's ear. And one guy goes, this guy has tits bigger than my girlfriend.
Oh, my God.
Good thing that skin is thick, huh, Greg? Bitcoin Twitter is a merciless cesspool.
I have been called way worse.
Whoever did that to you, you should dox them. You should pursue them to the ends of the earth, and you should ruin their life.
No, man, truth hurts, right? Truth hurts. I'm okay with it. I'm fat. What can I do?
Hey, if you haven't realized, the four of us are clowns, so you might as well just flick this thing off, go to, lookingglasseducation.com, and just forget listening to us and go sign up for some robust Bitcoin macro finance education material. In all seriousness, so you two, for those that don't know in our audience, Daz and Greg have collaborated with a number of other individuals on this educational platform, and without buttering your muffins too thoroughly here, it's phenomenal. Josh and I both agree. Extremely well done.
I concur 100%. Finished the first introductory course. Thought it was stellar. It is a superb introductory for somebody who's maybe coming at this from having no knowledge at all. It's a great step-by-step, walk you through the door, introduce you to, all of the friendly people involved, and get you on board with understanding why this matters and get you 100% up to speed. It's incredible.
Bitcoin and beyond. Talk to us about the origins, gentlemen. What is Looking Glass? How did it start?
Appreciate the kind words, boys, and the feedback. And so I guess where it sort of started was a surgeon by the name of Jason Sansoni reached out to Foss one day and said, Foss, I can't understand half of what you say when you go on these pods. We need a dictionary and a thesaurus combined just on bond, bond talk. And it'd be a great idea if we put something together to try and decipher some of that. So from there, I'd reached out to Foss for him to read an article I wrote on bonds just because I was mainly like, man, I'm an electrician. I don't know what I'm talking about here, but I was putting together some of the pieces that I'd, the journey I'd sort of gone through to share with my friends and family. And I reached out to Foss and said, mate, can you just run your eyes over this? And for anyone who's dealt with Greg, he's just such a personable, approachable guy, and he took the time to do that. for me. And it wasn't long after that he said, you guys need to talk, you and Jason get together. And from there, it just sort of organically grew about from what we wanted to achieve, who we wanted to talk to. And it sort of evolved a little bit more outside of that bond speak kind of thing. It was like, you know what, we've really got a target audience here of wage earners. These are the people who need to realize the power that sort of, you know, what Bitcoin can do for people, for wage earners, as far as a savings vehicle and so forth. But we also were really cognizant of the fact that most people get scared off as soon as you start talking about Bitcoin. So it was kind of like, how do we go about this without shoving Bitcoin down people's throat? But how do we also bring them along that sort of journey that most of us took along the way, you know, in order for them to organically sort of come to that realization that, hey, Bitcoin does form part of an investable portfolio, you know. And so from there, it was Jason and I, we started talking, and then Pleb Music come along, and he does some phenomenal stuff as far as media creation is concerned. He's involved with like Safer Dean's pod and all that. And it was just an organic growth from, you know, Bitcoiners just want to chip in and help, you know. And from there, Seb Bunny come into the fold. Again, I think Greg read one of his magazine articles and said, "Oh, we need to talk," you know, kind of thing. And he come into the fold. And then around Christmas last year, James Lavish come into the fold as well. So obviously we know Greg's background, and James, for those who not familiar with James's work, he just does phenomenal breakdown pieces of those complex financial themes in a newsletter called The Informationist. Highly recommend everyone go and subscribe. And he's kindly let us include that into our deep dive section of the platform. And then Dali has come into the fold just recently as well. So Dali is involved directly with the educational space, more the broader Spanish-speaking community. She's involved in My First Bitcoin, which is a program based in El Salvador, helping to educate and onboard people. So she's kindly come on board as well. She's going to help us translate the course into Spanish. And then
Hell yeah.
Along the way, we're sort of looking at our offerings. So you guys allude to the fact we've got one course out there at the moment, and we're working on others. So the first one's obviously just the foundational course about basic macro literacy. So some of these macro themes, we talk about inflation, we introduce the evolution of money, and just try and bring people along that sort of natural journey about where Bitcoin fits into the space. Now we're working on a Bitcoin-only course. So the first course was kind of, you're coming along, you see where Bitcoin fits into the picture, and then the sort of natural evolution of that is, okay, now I've learned about Bitcoin, I'm ready to buy it. What the hell is it, you know? So the next course is going to be all about the Bitcoin fundamentals, everything you need to know in order to be comfortable in the fact that you're going to make now the next move into an investable part of your portfolio. You know, we're going to be talking about the fundamentals, as well as we're going to break it down into two parts. First part being the fundamentals. What is it? How it works? Miners, nodes, you know, but again, trying to give this, that getting really bogged down into all the technicals and all that sort of thing. Just try and strip all that back and make it accessible to most people, you know, because we're really appreciative of the fact that not everyone's got the time or energy. Not everyone's going to be as consumed in it like we all were when we went down the rabbit hole. So it's kind of, what can we leave? It's more about what do we leave in, or, you know, and what can we take out more than anything, you know?
So this is what you've accomplished on this platform. This is what I was thinking when I was going through the foundations course. Every dead serious Bitcoiner has confronted the same issue. And that's when you talk to friends, family, acquaintances, people have no fucking clue what you're talking about. Okay? You know what you're talking about. You've spent 500 to 1,000, 3,000 hours studying this, but nobody else has any fucking clue what you're talking about. And that's because starting with Bitcoin is nearly impossible for someone that doesn't have the financial and economic framework to understand where it fits in. And this is why this course is so wonderful and going to enter our Rolodex of intro material, because it sets a baseline for monetary history, economics, finance, and then at the end introduces the implication of Bitcoin. Doesn't jam it down your throat, but that is why this material is so important. And useful. It's a useful tool in the Bitcoin proselytizing tool bag of the average pleb.
Tool bag for sure. The when I read this thing, it actually it made me think that this is really, really comparable to a very succinct, very easy to read, very condensed version of Dalio's Big Debt Crises, which is, I mean, if I was going to recommend one book, and even though that's a really tough tome for a lot of people to move through, that is like the synopsis of what is the baseline fundamental problem here, and why, how we're going to work our way through it, or how is this probably going to unfold. That book does that. But that problem is the book is long, the book is dense, and the book is tough to get through for most normal people who don't maybe have the attention span for that. And what you guys have done is condensed that idea into some simple, easy to understand, bite-sized stuff in a couple hour course. Honestly, kudos, man. It was an incredible, I thought it was incredible working through it. Anyone listening who has any trepidation about understanding this, maybe, couldn't recommend enough to go there. It's a free course. Sign up, check it out, and see what you think.
Foss, let's loop you in here. You're basically just Bitcoin matchmaker, huh? That's kind of all you're doing. You just sit around and get people connected, and that's the name of the game. I love it.
Thank you so much.
It was like
for that,
speed dating at Bitcoin 2022, man.
It was weird, wasn't it? Yeah. I'll tell you what, though. Thank you so much for the kind words about our platform. And I can't say enough about the team. I might have been a matchmaker, but one thing that Daz left out, this is quite funny, because Jason Sansoni, he's a surgeon. He's very type A++, right? Has to understand everything. And I say, okay, well, look, maybe you don't understand what I'm talking about on podcasts. Here's my paper, my 40-page paper. And I sent it to him, and he literally sent back, "Thanks. Now I understand even less." Right? Like he read the paper, and he goes, "I understand even less than what I didn't understand before." So he and I collaborated on trying to bring a second version of that paper, where he inserted stuff that he felt was necessary for the common person to understand the nomenclature I use. And to be fair, I did write that paper for Wall Streeters, because that's my biggest thing, is that there's so many people on Wall Street that don't understand Bitcoin. They do understand the nomenclature that I use,
right?
But they don't understand the mathematics and the reality that Bitcoin, as I see it, is actually default protection on sovereign debt, and with no counterparty risk. I mean, we could go into some of the beautiful components of Bitcoin from a Wall Street perspective, but to keep it at the highest levels, Jason not rewrote my paper, but we collaborated on it, and it was the genesis of something beautiful that you guys have, thanks for the kind words. And the one thing I will say is, there's a reason they don't teach this in high school, right, guys? Because if they did, no one would deposit their money in the banking system. Right? If they honestly taught what we are saying, people would say, well, then why the heck do I deposit my money in a commercial bank that regularly fails and is only rescued by more Fed printing and socializing losses in the credit-based system? So it's a great outcome. I obviously, hats off to Daz and Seb. Those guys are the real the worker bees, but also the guys that are going to direct the platform to the next level, which includes being translated into Spanish and also into Portuguese, because the island of Madeira has decided to embrace the platform as well. So these are some pretty exciting times. It was a vision of Jason's, and certainly these are the guys that have taken it to the next step.
Greg, having read your paper myself, Dan has also read it, and I think he'll resonate with this. I think I've got a pretty good handle on what's going on. The nomenclature you use is obviously, you've been steeped in this for 30 years. Jason is an incredibly intelligent guy. I met him at Bitcoin 2022 as well. He's an orthopedic surgeon.
We plan to go to his house and party and record an episode. The issue is going to be, can we record an episode after the amount of partying that's going to transpire?
Yeah. So what I'm saying, though, is like not a guy who I would expect to have trouble understanding things at all. I mean, he's got his MD. He's not. I don't think the rest of us sitting here are boneheads. This is just outside of our jurisdiction of expertise in some significant way. So what I'm saying to people out there listening to this is if you read Greg's paper and you understand it, good job. Like you're killing it. But most people are going to have a real serious problem digging down deep into the nomenclature, really truly understanding it without, referencing some very deep jargon on the way down. It is, and again, that's the point of Looking Glass, is to simplify this for everybody, but you're not an idiot if you have trouble understanding this stuff. This is just some very, very, this is just jargon that people in the industry have been, that have been steeped in this for a long period of time.
Yep.
And just walking in from the outside, you're going to have a problem. That's the point of read some books, get on Looking Glass, and get yourself educated in a more basic way and work your way up to understanding Greg's paper.
You remember? You guys, are you old enough to remember the show MASH? The comment. You remember Frank Burns when they introduced him as an MD? Frank Burns, MD, meaning medical doctor, but the boys would say no, manic depressive. That's what I think of Jason as being an MD, but he's absolutely so diligent in his studies or whatever. He won't allow himself not to understand 100% of the stuff, and that's impossible for somebody who hasn't spent 30 years in the pits or in Wall Street. So this is good.
Yeah.
He is such an important component of getting this off the ground, but the reality is, this has been taken over by Seb and Daz and taken to the next level. So Jason was instrumental, and Seb and Daz have taken it to the next level.
It probably highlights a good just a segue into the other side of the platform, really. So we've got the course, which is the core content, and it's more directed to those, simplifying everything, breaking everything down into easily digestible information. And then, for those of us who need to wet the whistle a little bit more, that's where the deep dives come into play, where it's, at the end of sort of each module and each subject within the course, it's, if you like this, here's our recommended reading. So we've got the book suggestions in there, but we also got the deep dive. So there's a 3-part series which Jason wrote, breaking down some of that math and some of that complexity out of those things. So we've got that section as well, just to provide a little bit more context, a little bit more. Obviously we can't address everything in there, and we're trying to keep it sort of clean as well. But our sort of vision is to provide information and collaborations, which we can talk about a prolific little piece that somebody in the team just here wrote and sent us to look at. But we're welcoming collaborators as well. If you've written, and the sort of guideline is timeless education pieces. We don't want to be, there's already very good resources out there like Bitcoin Magazine for talking about the stuff of today, and news articles and that sort of stuff with things happening in the space right now. We're trying to not attend to that audience. It's more about the timeless pieces and the timeless education, so that when we put it on the platform, we don't have to constantly curate it. It's whatever we put up there is going to be relevant today.
Right.
Should be relevant in 10 years' time as well.
Yeah. So, gentlemen, I have $1 million question here. This is sort of my priority question of the episode, if you will. And it's an area that I think we don't focus on enough on this show. And I think the spirit of Looking Glass and the material that's on there, I think, is sort of oriented towards answering this question. So there's this elephant in the room for average folks that listen to all these Bitcoin podcasts, read all these articles, which is investing is insanely complex, right? To be a stock picker, to be a value investor is very challenging, requires, just to quantify it, maybe tens of hours a week to stay up on this stuff. On the flip side of the spectrum, you've got an active management landscape that's expensive, right? Let's say you're paying 1 to 2.5% of your hard-earned capital when it's already hard to get returns, at least risk-free returns. So the theme I want to get to here is what most people are looking for is an allocation they can make with their hard-earned wages or hard-earned capital that they can, for lack of a better term, set and forget. DCA into for, say, 30 years through a career and be okay. Because of the complexity of the investment landscape, because of the precariousness of the macro backdrop, this has gotten increasingly difficult. Here's the question. What assets are investable in today's landscape. We obviously know Bitcoin's going to be one of them. How far does it expand outside of that? And then for the individual that's listening, that's like, what is my 30-year portfolio? What are there answers for this person? If so, what are they? Unleash on this question, because it's one I think that's important for our target audience on this show.
I'll take a stab at it, Daz, and then so based on my experience of managing money over literally decades, every investor has different risk return profile. You need to understand that there is no one answer for your entire audience. In fact, well, there is one answer, and it is the wrong allocation is zero. What is the right allocation? Well, that will depend on a number of factors, including so talking about Bitcoin as the preeminent hard asset in the investable universe, the allocation to Bitcoin should be in the context of what your total allocation to hard assets is. And that includes hard assets like real estate. It includes hard assets like gold and other precious metals. It also includes stocks of Bitcoin miners. Okay. And you need to understand that there are times when you actually want to be a buyer of Bitcoin mining stocks relative to Bitcoin. And now is one of those times, because
I'm glad you said that. I was just about to ask you that.
The performance of Bitcoin miners has been atrocious relative to Bitcoin. So, Bitcoin is down 50% from its all-time highs. And some of these miners are down 80% and more. When the flip side, some of the miners outperform to the upside because of the beta relative to Bitcoin. So the answer is this. Let's start with a 5% allocation in Bitcoin in the context of a portfolio of hard assets that makes up at least 60% of your portfolio. The hard assets that I mentioned, there are softer assets like equities, and then there's really soft assets like bonds. And as you guys know, I'm not a fan of the bond market. I don't think the returns or the coupon or yield to maturity of the bond market warrants any type of weighting in bonds whatsoever from an investment perspective. That being said, there's guys that try and trade bonds. Raoul Paul is out there saying, buy bonds again. Look, he's a professional trader. I covered my bond short recently, but I would never be long bonds right now. So here's what we got. We got an investable universe of hard assets, of which Bitcoin is the preeminent hard asset. And if your hard asset portfolio, which has to be at least 60%, then 30% in equities, and the other 10%, I would have to say, cash or short-term liquidity in a market that has experienced a drawdown of 25% or more in the NASDAQ, right? As long bonds were also down 10% last quarter.
Crazy.
It's never happened before in history that the NASDAQ has fallen double digits, and long bonds are also down double digits. So bonds may be stabilizing here, but it doesn't make them a good investment, because let's run through that math. A 3% yield on a 30-year bond is 5.5% below CPI. So it's a negative 5.5% real return. And that's before the debasement that occurs in the currency, that over a 30-year period, you invest $100 in today's dollars. What's it worth? What's the return of principal worth in 30 years? It's got to be worth, under 50% of parity, right? Or purchasing power. So you get screwed on both ends when you own a bond. You're earning a below market return or yield, and you're also participating in the fiat debasement. So bonds are not in my investment portfolio. I was short them, but I covered. For people that are not professional traders, I don't recommend shorting things, but you can start by not having an allocation there. So the easiest way to invest in Bitcoin, in my opinion, is to move money out of fixed income and into Bitcoin and into that bucket. And that was the basis of my paper that I wrote over a year ago, and it was timely from a bond market perspective, why every single fixed income portfolio needs to own Bitcoin as insurance, right? Okay, of portfolio that's invested in Bitcoin and Bitcoin derivative equities, let's call it, you have to have at least more than half of your portfolio in Bitcoin, the asset. You can have 20% of it in Bitcoin equities or Bitcoin miners, and you can fiddle around with other things like GBTC and discount opportunities where you're buying $1 worth of Bitcoin for 70 cents. I sort of like those things, but not your keys, not your coins. Your biggest exposure in the Bitcoin universe today has to be Bitcoin. Then you can move into some miners. All of this is to say, start by getting an exposure to Bitcoin, DCA. And if you need to pick a bucket to move it out of, it's easiest to move it out of bonds, in my opinion. Sorry for the long-winded answer, but
no, that's great.
yeah.
So to summarize where you went, and just correct me if I'm wrong. So you said 60% hard assets, 30% equities, 10% cash or equivalents. And you said of your Bitcoin allocation, 80% should be the real deal, the actual stuff.
60 to 80.
Is that an accurate?
I'd
60
say
to 80.
so.
Okay.
Yeah, I'd say so. And that reflects my portfolio. I do have higher than average exposure to private companies. But I do always in my portfolio, I calculate my Bitcoin exposure compared to my total net worth, not just to other liquid assets, not just to traditional assets such as stocks and bonds. It's to your whole portfolio.
Greg, should this person rebalance in this scenario when Bitcoin does what we expect it's going to do?
This is your risk management priority. One of the things that is hardest for people to do, that Daz and I have orange pilled, or anybody, is you finally get them up to 5% of their net worth in Bitcoin, and it's like they forget what the other 95% is invested in, right? And they're only focused on this 5%, and they're living each downtick or uptick in Bitcoin as if it's their life depends on it. We got to zoom out, guys. We got to move this to a lower time preference. Let's talk in 20 years type of experience.
Yeah.
And the thing that I will say, the number one rule, and this was one of your questions, the number one rule of investing is change your portfolio as the information changes. So, for example, Bitcoin makes up 40% of my portfolio. Now, part of that is because I started buying it in 2016 at a lower price and it's appreciated. But the reality is Bitcoin's a better investment today at its current price on a risk return basis than it was in 2016. And very simply, that's because the governments have responded like they did to COVID. And the adoption has continued. Lightning Network is out there. Layer 3 solutions are coming in. All of this stuff is so exciting. And that's why you can change your allocation as the information changes. Fair enough?
Absolutely. Greg, do you have, and I know people out there listening to this are thinking this themselves, are there any specific miners that you're a fan of generally? Do you have, what miners are you a fan of, is what I'm asking.
I cannot respond to that because we do have relationships with some of them at Validus Power, the company that I'm involved with. But I will tell you, do your research, understand that on a cash flow basis, these are trading at extremely low multiples. Whereas before they were, there was a unit bias for retail investors. Oh, why would I buy, Bitcoin at 40,000 when I could buy a stock at $10 a share, right? That's just the unit bias that people tend to go through.
Right.
But here's what I will say. Mining as a standalone business is actually a pretty shitty business because you don't control your input costs, which are energy, unless you own your power asset, and no miners own their power asset. And you don't control your output revenue because that's set by the market, right? So hash price right now is at all-time highs, and Bitcoin price is 50% off its highs, which means the profitability of mining is not as attractive as it was previously, and the stock prices reflect it. So they're risky. They are more risky than owning Bitcoin itself. But as in everything, you can always have opportunities based on irrational exuberance in both directions. To the downside, which we're currently experiencing, and to the upside. There will be defaults, though, in the mining space, and that's where my history comes in. As a distressed asset buyer, that's when I get excited.
Yep. That is a risk that a lot of people need to digest,
Mhm.
though. Daz, how about your answer to my question about the sort of set and forget it, blue collar, sparky firefighter portfolio, if you will?
Yeah, I'll take a bite of that crumpet. Obviously, obviously not as experienced as our main man Foss sitting at the airport there, but look, from this is sort of the approach we took with the Looking Glass foundation course too. It's like all assets are investable. It just depends on what part of the cycle you're in, and knowing where we are as far as the underlying unit of account that we measure everything in, which is a currency that's getting constantly debased, and it's kind of the so at the end of our course, we introduce all of these asset classes, and we talk about, we're not trying to shit on any one asset class because, like we said, we're trying to make it timeless. So in 10 years' time, this could change, right? So it's all about, it is a little bit of a look at today and the effects and the advantages and disadvantages of each asset. So I love the thought of investing in real estate. I don't invest in a real estate portfolio myself personally. I've got my main house, and why that is because we're in my market in Australia, we're at all-time highs, and it's grossly overvalued in my opinion. So it's about objectively looking at what's on the table, what have you got available to you, but also just looking at, okay, so where are you at the moment as far as those assets are concerned. So equities are another great example. I love investing in stocks. I still have a stock portfolio, but at the moment we're at all-time highs, and it's really hard to invest in something that is trading for multiples of their price earnings ratio.
Sure.
So, i.e., Tesla, right? So,
insane. Sorry, a quick anecdote. I was going to say, I want to find it on Twitter because Alfred just sent this tweet. I'm sorry to interrupt you, but it was it hits home. He said, Tesla was the 5th worst performing stock in the S&P 500, down 8.25% today alone, and 22% over the last 5 days. Investors are starting to think deeply about the this overvalued stock. And above that, he mentions this stat, which this floored me. Tesla's market cap is $200 billion greater than the next 12 largest automakers combined.
It's crazy.
If you don't think that these valuations are out of whack, I don't know what planet you're living on. I just had to throw that in there because I saw it right before we started.
And, people to support that, to say it's about future growth, but I'm like, how many cars are you expecting to make,
Yeah.
12x
all of the other manufacturers, right? Do we expect that?
Yeah.
I don't know.
And this is where my perception of, for the retail investor, we've been told for decades just to buy passively. You won't outperform the market, buy the market, right? And I think this is now can't be true. And I'll caveat that for buying an index ETF, right? S&P 500 ETF, you are guaranteeing you are paying the top tick for all of those stocks. If we take this recent drawdown out of the equation, you're basically guaranteeing that you're paying top dollar for Apple, you're paying top dollar for Tesla, you're paying without any sort of evaluation of the underlying business, So using those passive vehicles, I would argue now, is not the best way to go moving forward. In saying that, there are pockets of these sort of things that so commodities ETF, for example, might be an okay allocation right now based on the backdrop of the macro, right? But what I'm sort of suggesting is I think it's time for most people to start taking a bit more of an active role in their investment portfolio. You can still use passive vehicles, but just do it a little bit more. You need a little bit more forethought and a little bit more research. You need to get a little bit more actively involved in how you're allocating this. And one of the best ways to do that, in my belief, my humble opinion, is to outsource some of that research to people who are phenomenal at it. And i.e. Lynn Alden, your recent guest, I mean, she is just freaking brilliant. Her ability, and I trust her implicitly because I know she's not a Bitcoin bull, right? She will tell me if there's an underlying factor in Bitcoin. She is able to take this approach to the whole investing landscape and tell you exactly how it lies. And her newsletter is phenomenally underpriced. It is, I think, from memory, $200 US a year. I mean, even if you don't, and she will actually provide portfolio allocations for you to follow. if you so choose. But more so, just start reading those newsletters and getting used to the language. And I think it's quite accessible. The way she writes is quite accessible for most people. She might go down a few sort of rabbit holes that go over the top of people's head. But if you're exposing yourself to this, 2 newsletters, she does one free one, and I think she does one for paid subscribers per fortnight with actionable, investable outcomes, as well as giving you a backdrop as to the macro landscape and where we sit in these cycles. So, for example, she'll put out where we are in the commodity cycle. So is it a good time to be buying commodities? Now, you might not feel comfortable in going and evaluating a gold mining stock, for example, but, she has then the optionality to go, well, this is a good way to get exposure, and you can take that with a grain of salt. You can go and follow her blindly, or you can just take what she says on board and then objectively look at it yourself and then decide whether you go down that route.
I just wanted to expand on that, just the difference between passive and active management. This is a return to the active management value add, in my opinion, that Daz was expanding on. An active manager like my friend Lawrence Lepard, who is a gold bug that is moving his hard assets from gold and gold miners. He's just diversifying into the Bitcoin space. He is changing his portfolio allocation as the information changes, right? So he's a hard money focused asset manager that is changing his allocation as the information changes. Going back to Tesla and, Mike Alfred, there's things I agree with what Mike posts and things I don't agree with, but at the end of the day, Tesla has been valued as a technology stock, not as an automobile stock. And that multiple reflects technology multiples, not legacy automobile manufacturers, certainly. One thing to remember, though, is Mike is a value-focused investor versus the traditional growth investors that have, gotten their heads handed to them as growth multiples come down because yields and the base level of interest rates are increasing. When interest rates increase, that drives multiples lower. The ones that get hit are the long duration Tesla tech stocks of the world. And, it is a huge market cap. And as Daz said, when you buy the S&P index, the 25% of that index is made up of the top 4 tech stocks, Google, Apple, etc. So be careful. If you are passively invested right now, now is a time when you are getting the downside of growth multiples that are coming down. And Mike, Alfred loves to. He's not a fan of Kathy Wood. I actually am a fan of Kathy. I've known her for a while. We invested in a company together in Montreal. It wasn't her fault that people were throwing money at her style. That's what money tends to do. It follows past performance, not future performance. And there's something called the pressure of money when you're managing it, right? How do you get more money? Well, you put up good numbers. And when you put up good numbers, you attract more money. And sometimes it becomes self-fulfilling because you have to buy the stocks that have already reached very high multiples. You have to buy more of them as new money comes in. So that's the danger. It's a bit of a game. When the air goes out of the balloon, it feels horrible. And Kathy is not enjoying her past performance these days, but that's part of an efficient market there too. So Daz said, do it yourself. The truth is, I would, at any time in history, this is when you pay a professional money manager to manage your risk for you and you get results. Okay. And sometimes people will say, I don't want to pay the 2% annualized fee. Well, there's another expression. You pay them peanuts, you get monkeys, right? You got to pay a fee to get the best asset managers out there. And I would support that at this time in the market, particularly.
The Jack Bogle style investing, I think most people, like especially people that are fairly simple into this, they read that, it makes a lot of sense. Like Jack Bogle's idea of index investing over a long period of time has been very successful in the last 30 to 40 years. But in my mind, I'm a fan of what you have to say, Daz, which is And the reason is because it's kind of counterintuitive. When everybody's on board with a certain idea and a certain plan of action, and everybody's moving in that same direction, being counterintuitive is generally the way the market rewards you. And the way I manage my money personally is I do more active management myself. Probably wouldn't hurt to hire a professional to help me out a little bit, but here and there. But what I'm saying is, generally, you don't want to be swimming with all the other fish in the school. And when all the other fish in the school are doing the index passive investing, it may be a time to reflect on that and think to yourself, maybe this isn't the school I want to be swimming in necessarily.
This is where knowledge is power, because we would all agree the number of people that actively manage their portfolio that have no clue what they're doing that end up screwing themselves it's a large number.
It's high.
Most people that try to actively management trip themselves up. It's like when you're climbing a mountain, the one priority is not to trip and cascade downhill, right? So a lot of people screw that up. The environment's different than it has been in the past. I hear everything you're saying. I did want to double back to Greg, and I appreciated your comment, Greg, because it is easy to, in a short-sighted manner, Monday morning quarterback Kathy Wood and ARK, let's say. But like we all know that the system is getting increasingly fragile as more artificiality enters the system. And when liquidity enters once again, she could look like a genius in a year and a half. You know what I mean? That this is part of the predicament we're in, is that one second you're an idiot, the next second you're a hero. Things are boomeranging, back and forth, wall to wall. It's a more confusing market than it's ever been. And the last thing I wanted to throw in here is, I totally hear what you're saying, Josh. And I think at the very least, you need to hedge the move that everybody else is making. If everybody else at your company, your corporation is doing something, doesn't necessarily mean that that's not a viable strategy, but at the very least, you should be hedging it to some extent vis-a-vis, in our opinion, Bitcoin.
Well, great point, guys. Here's one of the reasons that people do a very poor job of managing their own money. Removing emotions from it is very tough. As a professional asset manager, you actually have to remove emotions. One of the trading sins of a novice investor is selling your winners, crystallizing gains, and holding on to your losers, when in fact, it's the reverse that you have to do. It's the sale of your losers that will allow you to live another day and outperform a benchmark. But bigger picture, and this is important for people that manage their own money in this environment. We're talking about a Fed that's raised rates twice and stocks are down 20%. And on the table, they want to raise another 7 times. And that doesn't even include the quantitative tightening that they're going to remove that equates to another 4 interest rate hikes. So there is, in the eyes of the Fed, 11 interest rate hikes on the table. And so far they've done 2, and the NASDAQ's down 25%, right? Close to 30%. S&P just touched bear market territory themselves. So there's an expression in the money management business called adult swim. This is adult swim time. This is where you have to know what is going on in the credit markets before you invest in the equity markets. And most people don't have that information. They don't know where the bonds of a company are trading, even though they're buying the equity of that same company. That is absolutely sinful. That's why you need professional asset management, especially in this type of market.
Yeah.
Adult swim. This is Foss in a Speedo, couple nipple rings, headed for the deep end, folks.
Jumping. Big cannonball. Greg, I had a question written down that I wanted to get to, and this is a perfect parlay into it. And I know this is a huge simplification of all of this, and I just want to hear if maybe you can come up with a couple of like obvious indicators for people, like people that don't understand. I mean, there's a million things in the credit market. Dan and I have been trying to dive into this deeper, but it still eludes us, I'd say, to some extent. If you had to have like 2 to 3 major obvious, like this is a flashing red light in the credit markets, the yield curve, number 1, spreads, like what are huge indicators that like this thing is about to fucking come off the rails?
Repo seizing up.
Exactly.
Tee off. Yeah, whatever.
Yeah. Okay. So that reminds me, Daz, we have to put together that dashboard that we were talking about, right? Because that dashboard is going to be, it's going to include some of these very important components. But for my history, it's yield spreads or credit spreads are the most important. You start with the high yield market. You move down to the, when I say move down, you move up in credit quality, down in risk to the investment
Mhm.
grade market. You look at sovereign credit spreads because there's contagion in all of the credit markets. All of these are widely available numbers that I'm certain most people don't even understand. But it starts with the fact that there's been huge outflows of high yield bond funds. Those outflows cause prices to go down, which means yields are going higher, and they're going higher faster than the government yield is going, the benchmark yield.
Right.
So that causes spreads to increase. Most people have no clue what that means, except remember, there's hedge funds out there that will buy the bonds at cheaper prices and short the equity, because the equity is a subordinate claim. And
Yep.
the poor equity guys are getting run over by sophisticated hedge fund guys who are using a subordinate claim in the capital structure to hedge their bond risk. That's why I say Adult Swim. That's why I say there is very, very huge arbitrage opportunity. That's what I used to do for 30 years when markets get volatile like they are. The most important thing to, and I think we hit on this, I don't think the Fed can possibly keep up this interest rate jawboning. Okay. I think things break. The biggest, I don't look at the yield curve for much information right now because it's so manipulated. What I do look at is things like liquidity, things like the VIX, the equity annualized VIX. When the vol or the VIX is over 25% annualized, markets are shut. New issue markets are shut, which means access to capital is shut. Access to growth capital is shut. So follow the VIX. Anything over 25% annualized, the Fed has a big problem because volatility is restricting access to new capital.
This is something. So what you just went through right there. If you guys are working on a module for this, I am very interested. I want to understand this in a much more fundamental way. And I think this is honestly like the most important. This is the elephant in the room for everyone listening. Like, if you understand some of these metrics and you understand where to find this information, this is how you don't drown in the deep end and during the Adult Swim right here.
Well, and
Yeah.
by the way, this is a full-time job. You don't do this after 8 o'clock at night when you return from your full-time job. This is why I say
Yeah,
you pay
that's the hookers and
somebody.
cocaine time.
Yeah,
Yeah.
well, you pay somebody to do it, right? You pay somebody
Right.
to do this on a daily basis to move as the information changes. Um, yeah, look, at the end of the day, we are in a very dangerous situation as far as financial markets go right now. We are on the brink of things absolutely seizing up, and it doesn't seem like Jerome is backing down. I think he plays a horrible game of poker myself, but at this point, it seems like he's hell bent on trying to contain inflation. I think the long run outcome is, as Luke Groman beautifully points out, they're going to have to back down, and if they do, it's quantitative easing forever, QE infinity. Okay, and if it's QE infinity, it's Bitcoin. That being said, it doesn't matter because all paths lead to Bitcoin. Just be disciplined and don't get over your skis in markets like this. Don't take excessive risk. Don't put all your orders in at a price. Scale into trades. Take profits in core positions so that you can keep some powder dry. As a professional trader, I would always trade my core positions. I just wouldn't let the core level get down below a certain percent. But that's how you harvest gains, and that's how you have dry powder for when things sell off in other directions. Um, there will be a price at which Tesla is a buy again, and I'm not a Tesla bull personally, but I have owned Tesla stock in the past. Um, it is not an automobile company, getting back to that, but I'm not going to tell you how to evaluate it. I, again,
Yeah.
would just stress to you guys, look at the other things that are happening in the markets. The NASDAQ has never been down in the same quarter that long bonds have been down both are down over 10%. That means that the traditional 60-40 portfolio, 60% equities, 40% bonds, is getting shredded. And guess who owns mostly 60-40? Well, every single pension plan out there. So we're in a bit of a mess, you guys, and this is why you have to always manage your risk on the basis that as the information changes, you change your portfolio allocation.
Daz, you look like a hyena staring at a fresh zebra carcass here. Get
Oh
in
no!
here.
Look, I was just gonna say, like Foss. It's a really understated. I mean, every investment book you've read for the last 40 years have told you most active managers underperform the market, right? So we're just conditioned to go and use these passive vehicles to go and do it ourselves. But Foss it's just an understated point at the moment. It's like a 2% active management fee. Even if you underperform the market, it's what's that 2% buying you? How much risk and hedge protection are you actually buying for that? And it's a really understated point because I'm happy to underperform the market if I am protected, and it's fully shifted and it's just becoming more and more apparent that active space, like what Foss is talking about there. I mean, I'm clued into this as far as a retail investor goes, and it goes way over my head, So it is, how much time and effort would I have to invest in order to get a 30-year education?
Right.
It's never going to happen. It's never
I
going
think
to
a lot
happen.
of people are thinking of themselves too, like, all right, so I'm going to pay someone 2%. I don't have a problem with that personally, like if it's going to save me, in the short term, but who do I go to? Like if I'm going to go to Merrill Lynch, like is the asshole sitting behind the desk at Merrill Lynch going to have an actual clue into any of this? Is he going to be like, let's do 70-30. We'll do 70-30 equities and bonds. Like, no, guess what? That's still a shit show.
That's probably a really important point too, because in Australia, it's really quite common to go to a financial advisor, right? But these guys are in their 20s. They've probably done a economics degree or something along those lines. Some of them don't even need that much. There's TAFE courses you can go and get accredited to these sort of things. It's like, if he doesn't have grey hair, he's never lived through a high inflationary environment. And I would argue the last time it happened, we had high interest rates to counteract it. So there's nobody in the active space who's really been exposed to the current markets that we're in. So you need somebody professional. You need somebody who can look at the underlying and all these figures, all the facts and figures with the volatility and so forth to actually help you navigate through that. And it's so hard to find it, because if you just go to a normal financial advisor, if they're not telling you to at least look at Bitcoin or gold for that matter in these sort of matters in this sort of time frame, then you should just walk it straight out the door, Yeah. And I would also argue if they're still around, if they're still doing that, they either must love it or they're really shit at it because they're still working, right?
Yeah.
True.
Follow the incentives too. Like not to pick on financial advisors, because they're much needed. They're going to be needed now and even in a Bitcoinized future. But the system is so insanely financialized. You know what I mean? And we've phrased it as Bitcoin is like a financial decomplexifier. Like the look on the face of a financial advisor when you're like, I think I'm going to siphon off 30% of my portfolio into Bitcoin cold storage. Not only is that nascent to them and flashes risk, that's also 30% of your portfolio walking out the door. Point I'm making is not that this isn't a fit, but you do need to find the diamond in the rough advisor that understands the macro environment, is willing to admit the challenges that confront us, and that has some grasp of what Bitcoin represents.
That's
or just the importance of hard assets.
That's
100%.
Right now, something like a Fidelity. Okay, they are one of the top 4 global asset managers, and they've just produced what I view as a seminal research report on this new asset. To summarize the title, it's basically there's Bitcoins and then there's shitcoins, right? That's paraphrasing the title, but you look at their price target by the year 2030, and it falls in line with. And by the way they do it is using internet adoption and comparing the adoption of Bitcoin to the adoption of the internet and the adoption of cellular technology, and very clearly they lay out a price path for Bitcoin that is similar to mine and other fairly bullish Bitcoin players. The thing that traditional asset managers don't understand is the relationship between volatility and risk. They think that something that's volatile is inherently risk. Well, that's not true. Volatility is the price of return. That's Bill Miller's statement. But if you have a non-volatile asset, we know that the returns are generally very low. And that's, it used to be that bonds were your low risk bucket. That only worked for the last 40 years, as Daz said, because interest rates have been falling for 40 years. Now it's a new paradigm. Anybody who's been in the money management business for less than 40 years, i.e., almost everybody, has never experienced a bear market in bonds like we are seeing right now. So understand that the paradigms change. Understand that a lot of financial advisors out there, they're not who I'm recommending. I'm recommending guys like Lawrence Lepard, right? I'm recommending professional asset managers who have been in the business for over 35, 40 years, who understand risk management, and that is what they bring to the table. And incidentally, Daz, the reason that the average manager underperforms an index is because an index is actually the performance of all the managers, right? That's what an index is. And so therefore they underperform because they charge a fee. Or a market rather is all the managers in the market. And so that's the mathematics of it, but that does not apply when correlations break, like the correlations that are breaking right now between risk absorbing bonds, where used to be equities, when equities sold off, bond prices would go up and buffer the loss in a portfolio on a price basis. Now they are both going down in price. So negative returns are compiling. This is why I suggest everybody read that research report by Fidelity and understand how important this is for the future. Not the next 2 months, but literally the next 20 years.
We'll link that in the show notes for this one.
It's good. It's good. We got to ask, what's the connection here, Looking Glass, in this El Salvador school system initiative? Walk us through what's going on there.
So we've been talking with My First Bitcoin, which is a philanthropic little endeavor in El Salvador, helping to spread the good word and teach everyone from school kids to anybody who needs to know about it. And we were very, very pleased to announce a donation on behalf of Looking Glass for the sum of $40,000 to help those endeavors in El Salvador. And they're going to utilize that. It's my understanding they're going to use some of that donation to secure themselves a facility. So a dedicated classroom space. They've been sort of renting spaces and hosting these sessions wherever they can, and they're just doing some phenomenal work there with that grassroots level of education about what Bitcoin is, because it was sort of introduced to El Salvador. It's our understanding that the execution of that probably it was done quickly, so it could have the education space really wasn't up to scratch by the time they pulled the trigger and announced this. So there's still a lot of misunderstanding about Bitcoin. There's a lot of they don't really know what it is or how it works, and they're just doing great work in helping educate the difference between Bitcoin asset, Bitcoin payment rails, and what the Bitcoin payment rails can do to El Salvador as far as their remittances and all that sort of thing goes, versus Bitcoin the asset. So how much of your wealth do you want to hold in this sort of long term, and just that working on that education space, which is just so vital in these countries that are onboarding this. So and Foss mentioned it just a little bit before as well. So we're going to be involved with Madeira. We're in discussions with some educators in Honduras, just in ways that we can help with this platform and this movement to help people realize what this thing is and how to deal with it, right? Because can't sugarcoat it. It is volatile, and if you go and ape in your entire net wealth and you rely on that entire net wealth, in these slightly less fortunate countries, then you're going to get wiped out and you're going to have a really bad time with it. If we have a 50% drawdown, so it's about getting that grassroots education about what this thing is and how it best serves those people.
Yeah. And this is, again, back to education. It is vitally important for anyone listening. Like if you're going to go ahead and put 20, 30, 40, 50% of your portfolio in Bitcoin, you better be ready for some shit to hit the fan. And either A, you don't look at it. It's all back to the psychology of investing. Either A, just don't look, because if you do, you're going to panic and you're going to sell. But number one, a priori, is make sure you're incredibly educated on how this works, what it is, why it matters, and what it means for the future. Because if you're not, you're going to shit your pants and you're going to sell at the worst possible time and you're going to get wrecked. And then you're going to ape back in when this thing's back at $70,000 to $80,000, and you're going to end up having half as much Bitcoin as you had. And I can say that with experience. I've done it myself, and it is what it is. Like you just have to look back and say, you know what, I fucked up. I, made the wrong move at the wrong time. Then bring it back to your education to understand your emotions are going to do you. They're going to do you completely wrong. You're going to sell at the worst time. You're going to buy at the worst time. So just DCA your way into this thing. Try to own as much of it as you can reasonably own, and let it run. Just let it go.
Josh and I like to dig into our emotions. We'll send each other cute texts on Signal and be like, what are you feeling?
Yeah.
And it's
exactly.
likely that whatever we're feeling, the opposite course of action is probably the prudent play at that time.
Mm-hmm.
But cannot emphasize and echo what you two said enough. The key to navigating volatility is A, position size, and B, education. And many, many people think they are ready for it, and they're not. You likely entered the Bitcoin space during a bull run. That's the nature of bull runs. How did you hear about it? Because it was hyped. You entered on the way up. Not a bad time to enter, because we all know an asset like this can escape to you to the upside in a way that's dramatic. So you needed a seat at the table. But Josh and I are constantly saying at the Firehouse, best generational wealth building tool you'll ever lay eyes on. Be prepared to lose 80% of your money in the short midterm. And living that is very different than talking about it.
It is.
So
I
guys,
alluded to the next course that we're doing. I forgot the second thought. So part one's about Bitcoin fundamentals. Part two is going to be about building your conviction, right? So it's going to be the anti-FUD narratives. So when you hear the mainstream media, shit on it, that it uses so much energy, we're going to do a piece about that. And that'll be the part about, okay, now you've thought it interesting with course one. Course two, you come to part one where it's all about Bitcoin, how you buy it, how you hold it, all that sort of thing. And then part two is now you've got it, don't shit the bed,
Don't shit the bed. Truer words have never been spoken.
Yeah. And it is still, it's actually crazy that the value of it has gone up as calculated by credit default swaps, and widening credit default swap spreads on sovereign debt has increased the intrinsic value of Bitcoin to over 400,000 US for Bitcoin. And yet the price has gone down. You're supposed to smile, and you're supposed to buy it, and you're supposed to be happy because it's your insurance policy, and the price of insurance just got cheaper. By far the best asymmetric trade opportunity and investment opportunity I've ever seen, and it just got cheaper. Hey, you're supposed to smile.
Mm-hmm.
I backed the truck up on this bad boy. My retirement account is richer in Bitcoin now, courtesy of that recent drop.
But guys, if you can't sleep at night, it means you own too much and you have to actually sell some, okay? That is the best indicator. The funny thing is, though, is the education process. Like I said, and I wasn't sure if this was on recording or what we talked about earlier in the podcast, you get some guy to go in for 5% of their portfolio. It's like they forget what the other 95% of their portfolio is invested in, right? You got to train your mind. You got to try and understand that this is a 20-year opportunity, and you lower your time preference. You can take profits, but you never sell your insurance entirely, because it's like selling your house your fire insurance on your house, and there's a forest fire right behind your house. Like, you don't do that stuff, right? So just manage your emotions. It becomes easier over time, but this is part of the process of becoming a full-time Bitcoiner.
Daz, have you ever had a Bitcoin night terror?
Early in the days, I'm sure, but I sleep like a baby, honestly. I rarely check price anymore, and it's like easy to say, but it's the truth. I just don't care. And I mean that makes it. I got to be realistic too. That you know, I've only been in this thing since 2020, so that was my first Bitcoin. I just celebrated my second Bitcoin birthday, right? But I was still lucky in the respect that I got in at a price. When I first started buying Bitcoin, and I started DCAing into it really early, right? So my cost basis for my major Bitcoin purchases is still really low. So I gotta be conscious of the fact that there are people who have shit the bed recently. There are people I've recently orange pilled at 80,000 Australian dollars, you know, and we're sitting at 40,000 Australian dollars. So they're not going to be as sleeping as pretty as I am, right? Because I largely am still ahead, but I know where this thing's going, and I know, you know, the conviction I have in this thing is not going away. And, you know, I look at Bitcoin as my savings vehicle, and I am not ashamed to admit, you know, Bitcoin maxis are like never sell, never sell, never sell. And I do have that. I think that optionality will come and evolve over time, but I'm also conscious of the fact that I'm treating it like my savings vehicle. If we have an 80% drawdown in the stock market, I'm going to reassess things. I'm going to rebalance because there may be opportunities to redeploy that capital. I'm using it like savings. That's exactly what I'm using it for. You know, just really, really fucking good savings.
So
Exactly.
you know that expression, right, boys? You sleep like a baby. You wake up crying every 2 hours. Okay, so Dad sleeps like a baby. He wakes up crying every 2 hours. So no, the truth is, no, I love what you're saying, Daz, and it's about discipline and it's about risk management, of course. But here also remember what we're saying here. This is an education process for your brain as well. Okay, we're talking to people by and large that need to get off zero. That's the most important thing I can say. Okay. Because even if the world moves to a 5% allocation over all of their assets, you know the price of Bitcoin is over $2 million a coin. Okay, it's that simple. We're not trying to get everybody to go to 100%. It's mathematically impossible for that to happen. Just because, you know, first of all, there's not enough Bitcoin. And other people would say, well, then there's got to be some value left in equities, and there'd be portfolio adjustments and everything. Of course, that is what makes a good risk manager. He sells, takes profits in things that have performed well, looking forward, takes money out of this bucket, moves money to this bucket, treats it as a asset that is a 20-year vehicle, not a 20-minute or 20-day. And you know, Josh, like everybody is playing with your emotions. That is the most important thing to control when you are investing. It's hard to buy something when the price is going down. It's like, oh, well, it's already gone to my price target. I'm going to wait and try and buy it even cheaper. And you know the expression, too smart by a half, and all these things, right? Just be happy to do it on a disciplined basis, and we'll talk in 20 years. That's the best way I can lay it out for people. Fiat is doomed. That is a mathematical certainty. Average your portfolio amongst hard assets that include gold, real estate, equities, but not soft assets like bonds, and do not hold cash for too long a time because it's being debased. Mathematical certainty.
It's a lot about sphincter control, you know. It's a sphincter tone is an important. It's a very important thing to have in the conversation.
If you've never felt sick to your stomach managing money, then you don't know what it feels like to manage money. It's a horrible business, okay? I did it for 30 years, and if you make money for people, well, they were so smart that they gave you the money to manage. And if you lose money for people, they're like, what an idiot. Why did, you know, it wasn't your fault. It wasn't your own fault that they gave you money. They blame you as being the asset manager, right? So it's a no love game. It's very difficult, but there are people that do it extremely well, and that's a time for professional management.
Yeah, it's all about Kegel muscular control.
Yeah, Josh, how are we going to pick a title for this episode? We've got like
I don't know.
Nipple Rings in the deep end, sphincter control, don't shit the bed. There's so many good options from this hour and 10 minutes.
Luckily, I'm going to have the ability to make that call, which is going to.
Can we get in education? Okay, education of emotions, education of emotions. Going back to Daz, and you know, the translation of our education program into various languages, it's helping the people that need it the most. Like, the United States is such a great country, okay? But let's be honest, the countries that need it most are the ones that are going to benefit from the price being held down like a beach ball underwater. That they can, the longer they can buy it, the better for those countries. We should be happy for them and the ability to make the world a more egalitarian landscape.
Amen, brother.
Can I just do two more plugs? So the other things we're working on. So the other thing that's really highlighted to us through some of these conversations with various countries is the real importance for a base financial literacy course. So we're pretty conscious of the fact that to take our first course, you probably, while it's targeted at wage earners and people who need it the most, and we're trying to bring them along that journey, it's also, you've got to be kind of interested in the investing side of things in order to start that process. So we're also conscious of the fact that there's a real base financial literacy course which we're going to be working on to the latter half of the year. It's going to be rooted on good, solid fundamentals. So just things like get yourself out of debt, any debt that, and bad debt, right? So good debt, bad debt, all that education about good debt, bad debt, low cost of capital debt, credit cards taboo, get yourself out of debt. What else can you do? Treat yourself like a business. Look at your overheads. Look at everything that's coming out of your bank account. Everyone wants to take money from you. So do you have, 5 Netflix, Stan, you name it, subscriptions? Do you need all those kind of thing, So it's about, and it sounds simple to do, but unless you sit down and you have a framework to build off, sometimes you're aware of these things. I shouldn't have 5 subscriptions to bloody Netflix and so forth. But until you sit down in your face and you've got a framework to work off, sometimes you just need that little kickstart to go and start looking at all these things. Same with like your insurance premiums and your excesses and all this sort of thing, and your bank accounts. Like, is your bank charging you to hold money there? What are they charging you for an ATM withdrawal? Are there other alternatives in your jurisdiction, wherever you are, to seek those sort of things? Because one of the primary things that people need to start learning, we feel, is that you need to increase your cash flow. Once you increase your cash flow, then you're able to deploy it in certain things, and you can start to look at that investment landscape. So that's what we're going to be working on latter half of the year. And working tangentially to all of that is we're looking at working this content into school-based curriculum and looking at how we can deliver that. So it's going to be, for the first course, we're looking at taking that into hour-long deliverables with the content, some activities and that sort of thing. And that's what Dali is really helping. She brings over 20 years worth of tutorial and schooling to the team. So she's helping us break that down into deliverable chunks. And Jason's looking at, those opportunities for, is there a market there? You know what I mean? And how we can dovetail into the schooling system and into certain districts and so forth to see if that's a deliverable we can start working on.
So guys,
it's pretty exciting stuff.
Love it.
I gotta sign out here, but I have one last thing to say. As Daz was gonna say, it's for the kids. Okay, we're doing this education platform for the kids in El Salvador. We're already seeing them being taken off the streets. The kids are going to school. They're actually very keen on this. The competition is the gangs, okay? The gangs are trying to pull them in one direction. Some of the kids are actually attending school and staying in school because they're so excited about this. So, we say when we invest in this long-term asset, it's for the kids. Well, the education platform is also for the kids. All right. So signing out from Detroit, I'm on my way back to Canada right now. Really appreciate the opportunity, fellas, and the support for this program. I'm just so proud to be part of it. And Daz and Seb and all the boys are crushing it. So thanks to you guys. And I look forward to talking to you guys in the future. All right. It's been really, really great. Thank you.
Thanks, Greg.
Thank you, buddy.
Safe travels.
Thank
Thanks
you,
for
guys.
coming, Greg.
Cheers,
Good
boss.
day.
See you, buddy.
Daz, why don't we close with just a formal handoff to anything else you want to say, and then a formal handoff to Looking Glass and yourself.
Sure. And I just want to, now he's gone, we can talk about him.
Yeah, Greg's gone. We're going to talk some shit about
the
Greg.
kids.
Yeah. Look, he's just such an instrumental part in what
Great
we've
guy.
been able to achieve. Just gives so much advice and so freely giving of his time. It's really underappreciated. I think just what he's doing for the space as a whole. Like, I mean, he's on every podcast. That's evident, but also just some of the conversations he's having in the background. I mean, you hit it on the head before, man. He is like number one, numero uno networker. Everyone just wants to talk. He's just such a legend. Like, everyone wants to talk to him. Everyone wants a piece of Foss, so he has been the main one to sort of pull us all together and get us all going. And his contribution here is definitely understated. But as far as handoffs go, so the web site you can go to is www.lookingglasseducation.com. And we got a Twitter handle as well, which is @LookingGlass edu. That's @LookingGlass edu for education. And we've just also put on a Facebook profile. It's not many users yet, but we realize there's probably a need to create that engagement within the community for people who are taking this course and perhaps have some questions and so forth. So if you take the course, you get just an invitation to join that Facebook group, and you can come along.
Can I get do I get a certificate or a diploma to put on my wall back here from Looking Glass?
We're actually
going
to do it. So, well, it's a good question, actually. These, we've got a quiz. It's there. It's ready to go. We're just playing with it doesn't look real good in our journey of trying to make this clean and accessible and look really good. The back end of the course, template that we've used, the quiz looks a bit clunky, so we're just working with the developer at the moment to get the quiz. Once you do your quiz, you can get your little certificate, mate.
We need some certs. Josh won't pass this thing.
I don't know. Dan's full of shit. I already passed. It's in the mail.
Yeah. Daz, this was awesome. Thanks for your time. We need to get you back to sleep. We started this thing at 4 a.m. your Aussie time?
Yeah, that's it. It's 5:20 now. So, that's good. I'll have a share and get ready for work. Thanks heaps for having me on, boys. I really appreciate the opportunity for coming on. Good to see you again.
Absolutely.
Likewise.
It was a pleasure.
Anytime.
It won't be our last. Thanks, Daz.
That'd be good. Cheers, boys.
Cheers.
Thanks so much for listening into the show. If you enjoyed this discussion, be sure to like or subscribe on whatever app you're using for podcasts or on YouTube. And if you have an extra minute, go ahead and leave us a review. We are also active on Twitter @blue_collar BTC, and our email address is bluecollarbitcoinpodcast@gmail.com. We invite questions, comments, or inquiries of any kind. We look forward to you joining us again on the BCB Podcast.